So talk to me a little bit about a little more about your all-in-one portfolios and the style that they are managed.
Yeah. So when Fidelity first launched ETFs, we didn't want to launch another passive, right? Because there's tens, hundreds of products that do a passive US index, things along those. When we launched our first ETFs, we focused on what we're good at. We're good at active management. We've been studying fact law since the 1960s. So we hired our first quant in 1965. So he must have done a good job because, as I mentioned, we hired another 200,
Yeah.
right? So now embedded within us, we have the largest quant shop in the world. And so the first ETFs that we launched focused on these anomalies. So quality, right? Typically high quality companies, not meme stocks or cannabis companies, high quality companies in the long run typically outperform. They have moats, they're generating high returns on invested capital, have really clean balance sheets. You can quantitatively analyze those attributes.
Yeah.
Value. So companies that trade below their intrinsic value, low PE, low priced earnings, low price to book, typically outperform. Low volatility, right? You don't always have to hit a home run, right? Just as long as you keep hitting singles, you can outperform. And then momentum, what does well typically continues to do. We've studied those factors and we launched the ETFs and they were doing extremely well. So when we created our all-in-ones, we wrapped those factors on SAR. So we have like 6 buckets. So
Yeah.
there's like the all equity, the 80 equity, the 60 equity. So based off the investment profile, we've kind of did a choose your own adventure. You can
So
just
balanced, and then on the low end, more bonds and more typically conservative.
exactly balance. The all in ones are just balanced funds,
Yeah.
right? And so the majority of the equity sleeve is this factor based approach because it's lower overall cost. There's not a portfolio manager, it's just a systematic rules based strategy on trying to remove all the emotion from picking stocks, right? Like you just look at it from a purely quantitative, not qualitative approach.